Have you ever considered how political statements can impact financial markets?
Absolutely. Markets are incredibly sensitive to shifts in sentiment, particularly those regarding trade policy.
Let's look at the recent fluctuations in the US dollar. What happened after the reports and denials about how severe President-elect Trump's proposed tariffs might be?
Well, it's interesting. The US dollar actually weakened against currencies like the euro and the British pound when those initial reports came out suggesting a possible softening of the tariff stance.
So the markets reacted pretty quickly to those reports.
They did. It was pure speculation, but it shows just how sensitive the market is to even a perceived shift in trade policy.
What about when President-elect Trump denied those reports? Did the dollar recover?
It did, partially, but the fact that it didn't fully bounce back suggests that there's still some uncertainty in the market.
Do you think that sometimes these political statements could be more about negotiation tactics than actual definitive policy?
It's possible. Chris Weston, he's head of research at Pepperstone, and he actually said he never thought those proposed universal tariffs were really likely to begin with. So maybe these pronouncements are all just part of some larger strategy.
Now, the Eurozone is often at the center of these conversations about trade. How has the euro been performing during all of this?
The Eurozone has actually seen its currency appreciate amidst all this uncertainty.
What about the yen? Has it been doing the same thing?
No, not really. The yen actually strengthened against the dollar, so it looks like there were some other things in play there, maybe things like investor repositioning at the start of the new year.
Sounds like currency markets are a pretty complex thing.
They are. They're influenced by a whole network of interconnected factors. These tariffs are just one piece of a much larger puzzle. They should review their trading journal regularly to identify patterns, strengths, and weaknesses in their trading approach. This self-reflection can help them learn from their mistakes and improve their trading performance.
What if they are new to all of this? Would you recommend they seek professional advice?
I would, especially if they are struggling to develop a disciplined approach. They should consider seeking guidance from a qualified financial advisor or an experienced currency trader. They can provide valuable insights, help investors create a personalized trading plan, and offer ongoing support.
It sounds like developing that disciplined approach is important for anyone who wants to try currency trading.
It is. It's crucial for success in this market.
So let's talk a little more about staying informed. How can investors know if the information they're getting is actually credible?
That's a great question. Evaluating the credibility and reliability of information sources is so important. There's so much information out there, but it's not all equal. There are a few things investors can look at to try to figure out if a source is credible.
Like what?
Well, start with their reputation. Look for established news organizations, financial publications, research firms, and think tanks that are known for being accurate, objective, and in-depth.
So basically look at their track record.
Exactly. Check their history, look at their editorial standards, see if they have won any awards or recognitions. Those can all be clues.
What about the people writing the information? Does that matter?
It definitely does. Investors should always look at the authors or contributors. Are they recognized experts in their field? Do they have the credentials, experience, or affiliations that make their insights credible?
So it's not just about the publication. It's about the specific people writing, too.
Exactly. And then you also have to think about things like funding and potential biases.
So, who is paying for this information, and could that be influencing what they're saying?
Exactly. Investors should always consider who's funding the information and whether there might be any conflicts of interest or biases that could be affecting their reporting or analysis.
So once you've considered all of that, are you good to go, or are there other things to keep in mind?
There are a few more. Fact-checking and verification are really important.
So you're saying don't just take their word for it.
Right. Look for sources that cite their sources, provide evidence for their claims, and have a system in place for fact-checking and verification. And be wary of sources that use anonymous sources or make claims without any real evidence.
What about transparency and accountability? Are those important too?
Absolutely. The most reliable sources are transparent about their methods, their data sources, and any potential limitations or biases. They are also accountable for their reporting and are willing to correct errors if they make them.
So it's about being open about how they operate and taking responsibility for what they publish.
Exactly. And it's also a good idea to consider a variety of different perspectives.
So don't just get all your information from one place.
Right. Consult multiple sources with different viewpoints to get a well-rounded view of what's happening. This can help you identify potential biases or blind spots in any single source.
So it's about getting the full picture, not just one side of the story.
Exactly. And then, of course, you also need to make sure the information is up to date.
It needs to be timely and relevant to the current situation.
That's right. Outdated information can be very misleading and lead to bad investment decisions.
And of course, the information should be based on solid data.
Absolutely. Make sure the sources you are using are relying on credible data from reputable organizations like government agencies, international organizations, or academic institutions. Be careful of sources that use data that seems unreliable or could be manipulated.
So basically, do your research on the information and the source before you believe what you're reading.
Exactly. By thinking critically about the information you are consuming, you can make better decisions.
That makes sense. Now, what about some warning signs? Things that might indicate an information source is unreliable.
There are some common red flags you can look out for. Sensationalized headlines or exaggerated claims are a big one.
So if it sounds too good to be true, it probably is.
Right. If a source is using sensationalized headlines or making really dramatic claims just to get your attention, they might be more interested in clicks and views than in providing accurate information.
Are there other red flags?
Yes, if they are not backing up their claims with any evidence or citing their sources, that's a bad sign. You should be wary of any source that's just making claims without any evidence or fact-checking.
What about anonymous sources? Should those be a red flag?
They can be. If a source is heavily relying on anonymous sources or is presenting unverified information as if it were a fact, that's a reason to be skeptical.
So be careful about believing everything you read, especially if it's coming from a source you're not familiar with.
Exactly. You also want to look out for strong biases or agendas. If a source is consistently pushing a particular viewpoint or agenda, they might be presenting information selectively or twisting facts to fit their narrative.
So they have an angle and they're trying to spin the information to fit their perspective.
Right. And you also want to be aware of any potential conflicts of interest. For example, if a financial publication is owned by a particular company, they might have a bias toward reporting favorably on that company.
So always think about who's behind the information and what their motivations might be.
Exactly. And then, while it's not always a sign of unreliability, poor grammar or spelling can sometimes be a red flag. It can suggest a lack of professionalism or attention to detail.
So it might make you question the overall quality and accuracy of their work.
Right. And finally, a lack of transparency or accountability is a big red flag. If a source is not open about how they work, where they get their information, or how they're funded, they might be trying to hide something.
Like potential biases or conflicts of interest.
Exactly. And they might also be unwilling to correct errors or take responsibility for their reporting.
So it's important to be aware of these red flags and to be critical of the information you're consuming, especially when it comes to making financial decisions.
Absolutely. By being a discerning consumer of information, you can avoid making costly mistakes.
That makes sense. Now, let's say you found a few sources that seem credible. How can you make sure you're getting the most accurate information?
It's always a good idea to verify information from multiple sources. There are a few tips that can help you do that effectively.
Like what?
The first thing you should do is cross-reference the information. Compare what you're reading from different sources and see if they match up. Look for consistency in the key facts and details.
So if multiple sources are saying the same thing, it's more likely to be true.
Exactly. And as we talked about earlier, you also want to consider the source's reputation and track record. Give more weight to information that comes from sources that are known for being accurate and objective.
So don't just take anyone's word for it. Make sure they have a history of being reliable.
Right. And always look for evidence and supporting data. Reputable sources will back up their claims with evidence, cite their sources, and use data from trustworthy organizations. Be skeptical of sources that make claims without any real support.
So basically, don't just believe something because it sounds good. Make sure there's actual evidence to back it up.
Exactly. You should also consider the author's expertise and credentials. Make sure the person writing the information is qualified to be talking about the topic.
So again, it's about looking at who's behind the information and whether they have the knowledge and experience to be considered an authority.
Right, and always be aware of potential biases. Every source has some level of bias, even if it's unintentional.
So think critically about the information you're reading and try to understand the perspective of the person who wrote it.
Exactly. It's also a good idea to seek out diverse perspectives. Don't just read sources that all agree with each other. Try to find sources that offer different viewpoints.
So you can get a more balanced and complete understanding of the situation.
That's right. And if you're really unsure about a piece of information, you can always use fact-checking websites. There are websites like Snopes, factcheck.org, and PolitiFact that specialize in verifying the accuracy of news stories and online claims.
So there are resources out there to help you separate fact from fiction.
Yes, there are. And finally, whenever possible, try to consult primary sources. Go directly to the original source of the information, whether that's a company's financial statements, a government agency's website, or an academic research paper.
So you're cutting out the middleman and getting the information straight from the horse's mouth.
Exactly. By going to the primary source, you can be more confident that you're getting the most accurate and unbiased information.
So verifying information takes some effort, but it's definitely worth it to avoid making costly mistakes.
Absolutely. It's an important part of being a responsible and informed investor.
Are there other resources or tools that investors can use to stay on top of global events?
There are quite a few. Things like financial data providers can be really useful.
Like Bloomberg Terminal.
Exactly. Things like Bloomberg Terminal, Refinitiv Icon, and FactSet, they all provide real-time market data, financial news, company information, and analytical tools that can really help investors stay informed.
What about investment research platforms? Could those be helpful too?
They can be. There are platforms like Seeking Alpha, Morningstar, and Value Line that all offer research, analysis, and even stock recommendations from experts in the industry. That can be a valuable source of insight.
Are there other tools like that?
There are economic calendars. Those can be really helpful for staying ahead of events that could move the market.
What do those do?
Well, they list upcoming economic data releases, central bank meetings, things like that. You can find them on sites like investing.com and DailyFX.
So you can get a sense of what's coming down the pike.
Exactly. And then you can also use social media monitoring tools to keep up with what people are saying online.
Oh, that's interesting.
Yeah, there are tools like TweetDeck and Hootsuite that let you track specific keywords, hashtags, and accounts on social media. You can get real-time updates from experts, analysts, and other people in the market.
Are podcasts and webinars a good source of information too?
They can be. There are a lot of financial podcasts and webinars out there where experts talk about all sorts of things, from global economics to investment strategies.
And industry newsletters and blogs.
Those can be good too. A lot of financial newsletters and blogs offer curated news and analysis, so it can be a convenient way to stay up to date.
So it sounds like there are a lot of different ways for investors to stay informed these days.
There are. And by using these resources effectively, investors can really get ahead of the curve and make better decisions.
That makes sense. Any final thoughts on all of this?
I think the main thing is that staying informed is an ongoing process. The markets are constantly changing, so it's important for investors to keep learning and adapting. By using the tools and strategies we discussed, investors can position themselves for success.
This has been a great overview of currency fluctuations and the potential impact of tariffs. What are some of the key takeaways for investors?
I think the most important thing is to remember that markets are complex and interconnected. Currency valuations are affected by a lot of different factors, from political events to economic data to investor sentiment.
And those things can shift pretty quickly.
They can. So it's important for investors to stay informed and be prepared to adapt to changing conditions.
Sounds like a good plan. Thanks for joining us today.
It was my pleasure.
Until next time, goodbye.